Welcome to today's Explainer. We are unpacking Lockheed Martin's August 2026 operational update. And let me tell you, we're looking at a company undergoing a massive fundamental transformation right before our eyes. Now, as a quick heads up before we get into the weeds, the data we're covering is based on publicly available news and financial disclosures as of August 2026. Forward-looking statements are, just expectations, and actual results can vary, so always do your own research before making any investment decisions. Okay, with that out of the way, let's dive into this incredible story.
$230 billion. Just let that sink in for a second. That is Lockheed Martin's all-time record order backlog as of Q2 2026. And what's really fascinating about this number is what it actually means in the real world. That is literally more than 2.5 years of total company revenue already booked, locked in, and waiting to be delivered. For a traditional defense giant of this scale, reaching a backlog this massive, it's pretty much unprecedented in modern times.
But, of course, that leads us directly to the elephant in the room. It's the core question for our explainer today. How exactly do you fulfill 2.5 years' worth of defense orders? I mean, you can't just flip a switch and double your output overnight, right? It requires a complete reimagining of how a legacy defense contractor operates. They literally have to transform their factories, their tech, and their workforce to meet what is essentially a wartime level of demand, but during peacetime.
Section 1. The Financial Boom.
Jumping right into the Q2 2026 numbers, Lockheed reported a very cool $20.1 billion in sales. That's a highly impressive 11% increase year over year. Not only that, but their earnings per share came in at $7.94, which handily beat Wall Street expectations by a full 10%. CEO Jim Teichlet credits this massive beat to their 21st century security strategy, which is basically this major pivot toward deep technological integration, fresh partnerships, and just relentless operational excellence. And honestly, the strategy is clearly working.
And if you look at their free cash flow, the turnaround is absolutely wild. Back in Q2 of 2025, Lockheed had a negative free cash flow of $150 million. Fast forward just 12 months, and they have generated a staggering positive $2.9 billion in free cash flow. That is a dramatic, night-and-day shift in liquidity. It gives them the massive war chest they absolutely need to physically build the factories required to clear that $230 billion backlog we just talked about.
Section 2. Historic mega contracts.
We are talking about defense contracts of a scale we rarely ever see. First up, the PAC-3 MSE multi-year deal. This is the absolute most advanced variant of the Patriot missile, and the U.S. government just awarded a modification that brings the total multi-year contract value to an astonishing $58.62 billion. To actually meet that, Lockheed has to triple their production capacity by 2030. Then, you've got the THAAD contract, a $35 billion deal requiring them to quadruple production of those high-altitude interceptors. Both of these systems are totally vital for defeating advanced ballistic and cruise missile threats, and both require an immediate, absolutely massive scale-up in manufacturing capability.
So you might be wondering, why are these contracts structured this way all of a sudden? Well, it represents a total watershed moment for government acquisition. In the past, the government would slowly, almost hesitantly, fund factory expansions. Now, the Department of Defense is providing massive, long-term demand signals. By guaranteeing these multi-decade, multi-billion-dollar deals, they're giving industry the confidence to self-fund their own capacity growth. Lockheed knows the orders are completely guaranteed, so they can confidently hire hundreds of new workers, like bumping up their staff in Camden, Arkansas by 50% and build entirely new assembly lines using their own capital.
Section 3. Building the future factory. To actually get all these munitions out the door, Lockheed is committed between $8 and $9 billion in infrastructure modernization through 2030, spreading that across more than 20 U.S. facilities. And we are already seeing the dirt move. They recently broke ground on a massive new munitions production center in Troy, Alabama, specifically for THAAD. They just opened a brand new missile assembly building in Cortland, Alabama for the Next Generation Interceptor program, and down in Titusville, Florida, a new facility is being built out for the Trident II missile. They are literally pouring concrete at a blistering pace to get this output scaled up.
But let's look a little closer here, because they aren't just building bigger versions of old factories. They're fundamentally changing how defense manufacturing even works. Lockheed is actively collaborating with GM Defense to integrate commercial automotive manufacturing practices right into their lines. Just think about the incredible efficiency of a car assembly line. Now apply that exact same logic to advanced munitions. They're using AI-supported analytics to optimize equipment, predictive maintenance to wipe out downtime, and machine learning systems to streamline quality inspections. It's this brilliant fusion of defense-level precision and commercial-level volume.
Section 4. Next-gen defense tech.
Now, innovation doesn't happen in a vacuum, and Lockheed is leaning hard into strategic partnerships right now. They teamed up with Saildrone, making a $50 million investment, and within just 6 months, they successfully pulled off a live-fire missile launch from an unmanned surface vessel at the RIMPAC 2026 exercises. That is crazy fast. They've also teamed up with Albany Engineered Composites to use their agile composite manufacturing for high-rate hypersonic weapons delivery. Plus, they partnered with tech giants Verizon and NVIDIA to test NetSense. That's a 5G-enabled AI drone detection system tracking targets in real time. They are clearly moving at the speed of the tech industry, not the traditional defense industry.
And if you want a sneak peek at exactly where modern defense tech is heading, just look at the Morpheus X rotor that they recently unveiled at the Farnborough Air Show. This isn't a missile. It's a high-power microwave counter-drone system. Look, we all know drone swarms are the new, terrifying reality of modern conflict. Well, the Morpheus is designed to fly straight into that airspace and neutralize more than 50 enemy drones in a single flight, using focused microwave energy. It is an incredibly efficient, reusable countermeasure to a very modern threat. It really highlights how Lockheed is adapting their portfolio way beyond just traditional rockets.
Section 5. The Global Market Reality.
Zooming out to the global stage, Lockheed Martin's footprint is expanding incredibly fast, and they're doing it in very strategic ways. We're seeing direct sales, sure, like Peru recently selecting 12 F-16 Block 70 aircraft, but more importantly, we are seeing deep, integrated partnerships with key allies. They're setting up an F-35 depot in Canada, and fascinatingly, they are partnering with Rheinmetall to co-produce ATCMS missiles right there in Germany. As CEO Jim Teichlet pointed out, co-production provides extra capital and factory space, but crucially, it places production capabilities geographically closer to deployed allied forces. It is a massive strategic and logistical win. And I think CEO Jim Teichlet really hit the nail on the head when he said, "This is a once-in-a-generation moment, and we are moving with wartime urgency." Honestly, I think that perfectly summarizes everything we've covered today. Between the multi-billion-dollar factory investments, the AI integration, and the global partnerships, Lockheed Martin isn't just fulfilling old-school orders anymore. They are frantically reshaping the backbone of the entire defense industrial base to meet the realities of a very, very tense globe.
But okay, here's where things get genuinely paradoxical. We've just spent this entire explainer walking through historic, world-changing operational wins, right? A record $230 billion backlog and raised financial guidance. Yet, if you look at the market reaction in late August of 2026, Lockheed's stock actually slipped 1.38%, closing at around $563. And Wall Street analysts, they currently maintain a consensus hold rating. Despite the wartime urgency and all these unprecedented contracts, the broader financial markets seem incredibly subdued. They almost seem hesitant to price in the sheer scale of this physical growth.
Which leaves us with one massive, vital question for you to chew on. Is the market totally underestimating this 21st century defense boom? Are analysts just way too hyper-focused on short-term margins, completely missing the long-term reality of a company that is locked in its revenue for the next 2.5 years while fundamentally modernizing its whole manufacturing base? It's a fascinating disconnect between operational reality and market perception, for sure, and it's definitely something we're going to keep a close eye on as these new factories start churning out products. Thank you so much for joining me to explore this incredible transformation today. I hope this explainer gave you a crystal clear view of what's happening behind the scenes. Keep learning, and I'll catch you next time.